SBA EIDL Loan alternative up to 10 million, incredibly fast funding without collateral with it, bad credit, good credit, no hard credit checks, low documentation, and so much more. I'm going to be getting into all of that in this video, as well as how to give you a more personalized and customized approach to getting business funding, showing you your best options from top to bottom, very thoroughly laid out from introduction to conclusion, how it will be all worth your time. This video will be huge because I'm not only going to talk about the different services outside of the EIDL loan, but I'm going to show you the qualifications, how they work, parts of the underwriting process, things that you have to understand that if you're looking for funding, let's say you're doing a certain amount of revenue, but you're looking for millions and it's just not adequate enough because of your revenue. Maybe it's because of collateral, credit, you won't get it. How do you readjust? So I'm going to be jumping into the share screen. I have quite a few tabs open here, and I'm going to be giving you some examples. So please stick with me through this because, again, this will be a huge part of your education, and you're going to get a better understanding of, oh, well, I didn't qualify for a line of credit, and why didn't I qualify? Well, it's because of this. Well, if there was a working capital lump sum that I could receive, however I was going to use it, why did I only get so much, or I didn't get approved at all? And what could I do thereafter to readjust? Or if I get approved for one option, how can I add another one on top? Is that even possible? What can I do right now when we're going to be getting into this impending recession so I can be more of a qualified applicant? I'm going to be getting into all of that. Again, this is not one of those phony videos where somebody tells you 100,000 or 200,000 line of credit. All you have to do is have 6 months in business, come over here. No, I'm going to show you some of that, but I'm also going to be getting into what are the qualifications. And I have these tabs open. You won't see right now, but once you see these, it doesn't matter how long this video is. If you do not watch this, you can save it, come back to it, but don't make an excuse that you didn't have time to watch this video or didn't read one of my blog posts or didn't get my questionnaire response back because you didn't look for it. This will all be in here. So I'm going to be sharing with that. Now, if you're here on the live with me, please give me a hashtag live so I know you're here now, or a hashtag replay so I know the time interval. All right. So this is myself. I'm a business loan broker. If this is the first time you're watching me, I help all businesses, small businesses get business funding of all types of services, building business credit, fixing, improving FICO, getting access to business credit cards, personal credit cards, taking advantage of different opportunities financially, building your own home business, which is where I began a while back, and then later on transition into different niches. And I always wanted to get into the loan brokering space, and I've been doing this for quite some time now. I've helped out industries of multi-millions, billions, less than 100,000 a month, just nothing getting started. So I'm gonna actually go into an email where I help out clients. I can't show you that email because it is confidential. I can't disclose any of that, but I'm going to be guiding you through what I say a lot of the time. So now let me jump into the share screen. Oh, but before I do that, you have a lot of options. You have revenue-based funding products, cash flow-based, which is looked at upon your revenue. Primarily, we'll look at how your cash flow is doing, your overall, if you have any bounced checks, non-sufficient funds, negative days, do you have consistency in deposits, how many deposits, what's your average daily bank balance? And that right there alone gets a lot of people, because a lot of individuals come to me and they go, well, I'm doing 80,000 a month, but how much are you keeping on average daily balance? Oh, well, I have less than 1,000, or I just have 100, less than 100, or just about 300, but you're doing 50,000. Guess how much you're going to get approved for? A lot less than what you maybe would have thought of, or you wouldn't have gotten approved for anything. If we said, well, we can get you approved between 75% of your monthly up to 200%, but you fall closer to the 75%, but you're saying I'm doing consistently this amount. Yeah, but your average daily bank balance, you have a couple of non-sufficient funds. Well, we have to look back and also look at your personal credit and say, well, why do you have so much debt? Why do you have so many inquiries? Why do you have your credit utilization ratio so high and your credit's bouncing up like this, even if it's stable? So be happy with what you get. And the way to look at getting business funding is not by getting everything at once all the time. If you have projects or a project to work on, and let's say you don't need all the money at once, what you can do is take a little bit, take what you can get, and then come back and get more. During these times, it's more important for you to have a relationship with your lenders, your underwriters, the brokers like myself, because if you don't, and if you just try to apply anywhere and get different funding programs, and then you end up getting into defaults, past judgments, then you have all these UCC liens, blanket liens on you, and now you have so much debt you've put yourself into because you're accumulating it with credit cards and so much more on the back end, but you're not building a relationship with someone, then that's where you get yourself into a hole. And now you have to find a way to get yourself out of it. And that can possibly mean things like credit repair and so forth. So everything will be for you down below in the description at any point. But I want you to make sure you listen and watch this, since I'm going to be getting into the share screen. So let me cover the products first, and then I'm going to go into that qualification for a certain product, and I'm going to jump thereafter. Now, you have short-term loans, short-term cash advance products. Usually those last between 3 to an 11-month term, sometimes 3 to 12 months, 4 to 12 months, usually between 3 to 11. And then you also have medium, which is kind of like a 1 to 2 year. And then you have long-term, which is like considered 2 to 10 plus years, 2 to 30, like the EIDL loans, 30 years. And if you're thinking, oh, well, can I qualify for an SBA EIDL loan right now? No. On the fact that the funds have been completely exhausted, except from the fact that some people have been receiving emails if they want to have an approval, and it may take a little bit more time for those of you to get approved for. So no, I'm not going to start answering EIDL questions at this moment, but if you have anything that's related to what I'm talking about, let's stick to that subject. So you have those short-term advances called merchant cash advances. They're kind of a hybrid as well, where you can get more of a fixed instead of a variable, where you know what's being taken out of your account. Usually these are daily/weekly repayments, and they're very beneficial. There are a lot of people that get approved for these products. And then you also have the unsecured term loans, which usually range between 12 to 24 months. You don't have to offer up collateral. So these two products I've talked about already, non-collateralized. And the qualifications are a bit different. So if you're in a cash advance, that's where you would be, I want to make sure I say this in the best way possible and start it in the best way. So between 3 to an 11-month time frame, but you can also get between 4 to 24 months with cash advances, or 3 to 18 months. Just depends on the lenders that you're working with, and also the brokerage, how is it working all in-house, etc. But you can have a minimum of 4+ months, sometimes 3+ months, or 6+ months in business. A lot of business owners will like to see at a year's plus worth. And some of the underwriting guidelines, I think I want to show you that on screen if I have that on one of my slides here. But to get a year to 2 years, let's think about it this way. If you want maximum years, because right now, if your interest is one thing, you don't want to just look at it at the interest rate level. Let's say you had 38% interest, which is an average on these most cash advance products. Well, you have to look at the term you get. The longer the term, the better, because then that will lower your repayment. But not necessarily does it mean that if you get a longer term, it's in the best interest. You have to look at the benefits. Does the benefit exceed the repayment? Are you producing something in the short term? Is it going to grow and expand your business? Will it double, triple, quadruple your profits? Will it do it short and or long term? So there are a lot of questions to be asked, as opposed to just saying, well, I'm getting a higher interest rate. It's not the case that you should only look at that. So actually, let me jump into the share screen. And as I show you what I'm going to show you, I'll talk a little bit more about the products. Another reason why I want to bring this all to your attention, instead of just showing you, like, here's a place to go and I'll show you that, is because a lot of people don't have an education on what it actually takes to get business funding. You think it's just as easy as, well, I have this amount of revenue and then I'm going to get approved for this. It doesn't work like that. So let me go over here and find it. Okay. Before I show you what's on screen, so you also have, let me look at this email that I put together for clients. So you have the short-term loan option, which usually is a cash advance. They can range between 3 to 18 months, 4 to 24 months. The majority of people get approved between the 3 month to about 11-month time frame. And again, if you want 1 to 2 years unsecured term, you better be bringing more revenue to the table. And what I mean by revenue is, what are you doing on your lowest month? What are you doing on average? What is your gross annual sales? So if you had, with these cash advance, if you had 50,000 plus per month in average monthly revenue, and you have a 700 plus FICO with at least 2+ years in business, and it can also be industry specific, then you may qualify between 12 to 24 months. But if you don't bring that, then you won't qualify for it. But if you're just on the verge, you may need to do something with your credit to get you there, or your revenue, or your time in business, etc. And then anything else below that, it is between like the 600 and above range, where you can get somewhere between 7 to an 11 month time frame with about a year's worth of business, and you're depositing at least 25,000 plus per month. 4 to 6 months, people usually fall in that range when they have less than a 600 FICO, and you're depositing just above 15,000 per month. So if you're that individual who has 15,000 plus per month, or let's say you're doing 50,000, but you have a 580 FICO credit score, you have 3 years in business, where do you think the problem is? Bad credit. So that'll only approve you for about 4 to 6 months. If not, we only get you the least about 4 months, and you have to prove that you can pay. And then once we get you to get into that, then we can try to increase the terms, lower the rates, get you more funding. But until you build a relationship with someone, you do not have the leverage and the say-so to get what you want. So there are credit repair services. I'll link you to that information down below if you want to learn more. Let me open up the screen. Oh, sorry. So while I have this open, I'm going to go through an email you can't see on another tab of mine because it is confidential between myself and the client. But you have that option for cash advance. If you're wanting, okay, so there's qualifications, which I'm going to show you a separate page for that. So I'm focused on the products right now. Another one here you have is the unsecured term loan. Let me go to that segment. If you've gotten an email response back from me in your questionnaire, you know what I'm talking about. And I probably responded back and you have not looked in your spam box, and go do it. There's no excuse to say that. I know we all get busy, but we're business owners and we have to be savvy about looking through our email inbox. And I know we all spend a lot of time in that. So I have like multiple Gmail accounts, Hotmail, etc., for professional, unprofessional, personal uses. And guess what I do every day? I look through all my folders. So it's no excuse for you not to. And I run multiple businesses, so don't make an excuse about that. So, and I'm not saying this to be negative. I'm just saying this to give you some tough love. People will take it the wrong way. I'm not trying to be aggressive about it. Number 2, unsecured term loans. So this individual, I shared with them how it would be a stretch for them to get 1 to 2 years based off of their revenue and a little bit more. So they wouldn't qualify for this, but I still showed you the option. So to get 1 to 2 years without collateral, and this is a monthly repayment as opposed to the cash advance usually being daily to weekly, 1 to 2 year terms. You can refinance up to 2 MCAs if that's what you're trying to do to move into an unsecured term loan. These report to the business credit bureaus. So that means you have to have established business credit. If you don't have even your Dun & Bradstreet up, even your other credit bureaus, forget it. If you don't have enough, if you have a thin profile, which is what we look at, no credit worthiness, but you want 1 to 2 years, you won't qualify for it. Thin profiles don't get you anything. So that's why it's important for you to build business credit. And I'm going to leave resources for you guys down below in the description. And don't feel shy at any moment. If you guys have questions, comments, or concerns, please voice them for me. I'll try to answer them towards the end because I want to get through a lot of this material in a short amount of time that we have. I'm going to try to get this done in the next 20 or so minutes. I know that's crunch time, but everything you guys need, all the resources down below in the description. And those of you showing up, great. I appreciate you a lot. I really do. It shows you want to stay educated. And a lot of people, they just come in here and they submit a questionnaire and they forget about it, or they don't even respond back to me when I send them a response back. Don't waste my time if you're doing that. Please go somewhere else. And I'm saying that already because I've said it before, and it's just, you're not dealing with just anybody. I'm an expert at what I do. You're not just submitting information to these other online marketplaces and they give you an automated response. It's not very personalized and customized. I will take good care of you on a personal level if you care about and if you reciprocate. And as well as I'm going to show you how all of this works on a business financing level. So just take the time. And I send people messages like the other day. Somebody wanted a response back. I told them, hey, did you look into your spam box? Here, I'll copy and paste the email that you probably didn't see. They've gone ghost for a couple of days. Hey, where'd you go? And I send them a response back. Now they stay quiet because they finally get an answer that they don't want necessarily to have. And that's how business funding works. If you don't have the greatest fundability details, you can still get funding. Just know that you may have more of a medium to higher rate. But if you have fundability details, and what I mean by that is your time in business, like over 2 years, 5, 7, 8+ years, your revenue average per month, you're doing 50,000 and above, 6-figure months. If you're doing if you have like a 700 plus FICO, at least a 680, you have more leverage. You can qualify for other products. And let me cover the rest of them right now. And I have a document and I have bank statements that I can't show you on the screen from certain clients, but I'm going to use those as examples in what I'm covering. So this is amazing stuff, guys. Okay, so to get 1 to 2 years unsecured term loans, now we went away from the cash advances, and there's so much more I'm going to cover in that in a moment. 2 years time in business. Do you have a 660 FICO credit score? Are you depositing $25,000 monthly into your business bank account, not a personal account, not one that you use for business? If you have that amount, but you have a personal account, I'm sorry, but it won't get processed. You will probably be spit out into another service. Depends on where you go, or they may not look at anything else after that. So if you have a personal account that you use for business, right now you can get approved up to $5,000 as a 1099 gig worker, independent contractor, self-employee. And it's very reasonable. Why would you want to use your personal account for business? Even as a sole proprietor, I've been there, and you don't have an LLC, you don't have a business checking account, especially when you're building business credit, they look at all this. And if you don't have it, it necessarily won't help you. And you're going to continue to qualify for what you qualify for until you pick up all these other pieces. So $25,000 deposited monthly in your business bank account, or $300,000 in annual sales. That can be different. Again, if you are going through our cash advance product, and you're doing $50,000 a month, or excuse me, yeah, $50,000 a month. And it is a bit different there. The amount that you're looking to get in annually is a lot more, but there are different advantages to those products. So let me come back over here. No bankruptcies, liens, or foreclosures in the last 3 years. I have business owners who come to me all the time who have that. I just went bankrupt a year ago. Can I qualify for this? And they have certain eligibility requirements, but you won't meet it until you can pass all that. So what do you do in the meantime? Well, I didn't want a weekly repayment. It's probably because how you're getting paid on your terms. But if you're sufficient enough to be able to make those repayments, and we never give you an offer that wouldn't make sense, then you have to ask yourself, does it make sense for me to take this? More details. Rates are about 1 to 3% per month for the 1 to 2 years. So let's say you got 12 months, and you were assessed at a higher risk, and it can be industry-specific bank statements, average daily bank balance. If that's low, so non-sufficient funds, etc., you're going to get the highest at 3%. So 12 by 3, that's 36%. And if you were to get a cash advance product at 12 months, you maybe would have been in the 20 to 23, 25% range. And it's a huge difference. So think about that. So your overall total cost of financing with this specific product will be more for the unsecured term loan than it is for the first option, which is the advanced product, which gives you better benefits and saves you on interest that doesn't accrue so much over time. And I have examples here for clients. I can't go too much into depth on that. And then there's another product where you can get up to $25,000 same-day instant approval. It's a hybrid merchant cash advance, similar to what we've been talking about. Gig worker, self-employee funding up to $5,000. You have to be doing at least $3,000 per month. The up to $25K product, at least $5,000 per month. And if you want to be in the up to $2 million range, you have to be doing at least $15,000 a month. And it depends per lenders as well. In some cases, they'll look at $20,000 or $25,000 or $30,000, like we've kind of been alluding to. You also have a business line of credit. You can get up to $100,000, $250,000, $150,000 more if you use it through collateral, usually accounts receivable financing, B2B, business to business. There are a few more other ones, and I'll get into the screen that you guys are looking at. I'm opened up on another tab here, so you guys can just keep going. And if you need to jot down any of this, please do so. It is very well worth it. Option 3, you have a secured line of credit, and I said that is backed up by accounts receivable financing. And I'll show you if you qualify for that option or not. And I put it right here for this questionnaire that I had people submit. I'm looking at a client of mine, and I'm not showing you again because it is confidential. I may have a template later that I can show you, but it's even harder to do it that way. So that's a secure line of credit. And that's what a lot of people are gravitating to, is getting to use a line of credit so you can withdraw the funds, use them however you want, and it becomes a revolving line once it's pushed back into your account. And so you only pay interest on what you take out. For example, you only get approved for $50,000, and that's a huge amount, usually average of $55,000, and you only want to use $10,000 of that So one season or whatever time that is most effective for you, you use that and you only pay interest on it. And then once you pay it all off, it goes back in the original 50K. So it's not 40, but it's 50K that it starts off with again. And you kind of reset your interest. So you get interest usually weekly or monthly. There's sometimes daily, depending on your risk and the lenders as well. So let me come back over here. Accounts receivable financing, that's another option, an AR line of credit. Perhaps you've heard of this, but you can offer up unpaid invoices to an invoice factoring company, and then the invoice factoring company invoices your customer who you initially got the invoice from. So you give the AR company or the invoice factoring company your copy of invoices, however much control, however much you want to receive. And that's what I love about it. And it's the number one way that the SBA looks at collateralizing is accounts receivables, and they have other products like real estate equipment, inventory, etc., that they'll take a look at. But the very first one and the most attractive one to them is the accounts receivable financing. So if you want to give up control a certain amount, that's what I recommend you do. I went over the qualifications there. I'm going to skip that part so we can get through this. Home equity line of credit. You can inject money out of your home if that's a stretch you're willing to take. And that's one of my last options that I recommend, along with like the last options. You're going to hear me say this a little bit more, but like 401k, IRA financing, those are just some of the last things that I would take a look at if nothing else works. Like you've already taken a look at grant opportunities, then maybe it's those options that you're going to take a look at. Excuse me, I'm just burping up over here. I just had, it's because of the milk. I had cereal earlier, and so that's starting to get to me. So you can withdraw, and whatever equity, whatever you have there, we can use on your mortgage payments, as well the difference between that and the appraisal or the property value currently in the market. We also have the SBA 7A loan options, and there's multiple ones. There's the SBA 7A, the SBA 7A. Underneath that, you have the Express, the Standard, the Small Business, the Cap Line program. You also have the Community Advantage program, quite a bit more. You have the 8A mentoring, the 504, and microloans, and a little bit more. But there are a few underneath the SBA 7A, and I'll show you that, like I've shown here to a lot of my clients in that questionnaire. Like this specific individual, I said this option could work if you had sufficient collateral to help you get the amount you want all in one, or even a down payment of about 10% and above, or little by little. But you cannot have excessive business debt. You must have a super strong credit history. So what is emphasized here is, do you not only meet the minimum of 650, 660, or 680 and above, but you have your credit reports look good. You don't have excessive business debt. You're not going over the 35 to 45% and above. Utilization ratio, you're keeping it low. Minimum inquiries, not too many in the recent months. In the last year, 6 and above, even a bit less than that. And we have to look at your FICO SPSS score. So nothing with like late payments, UCC liens, anything that's showing that you will not be able to make the repayments, even if you think you can. There's these things that are upholding it, and you're putting more towards that, and that we cannot give you this. So I speak about the SBA 7A loan option, and there's various ones. We have like a hybrid SBA, where I'll go into that here. 2 separate loans. We can get you a term loan, line of credit, or a cash advance. In the meantime, while we're evaluating you for the SBA 7A loan, up to 10-year term loan, and it takes 6 to 8 weeks for you to actually receive your funds. And that's where I'm going to need documentation from you. So if you are willing to take the time, like a lot of you, if you're here watching, you've probably gone through this with myself, I'm going to ask for documentation from you, and that is 2021. It depends on what year we're watching this. If you're watching this next year, it'll be a bit different. But 2021 business bank statements, 2020 and 2021 profit and loss and balance sheets. I need your year-to-date and profit and loss and balance sheet, at least through Q1. Previous 3 years of business and personal tax returns, your aging AR, AP report, accounts receivables, account payables, business debt schedule, and application sent via HelloSign, which I'll attach to you, which is also part of a digital application process. And a lot of us, we don't always have the aging accounts receivables. Depends on how our business is set up, as well as the business debt schedule. Most of us, we do. Just don't have it together. Make excuses about it. And so if you're not willing to submit high documentation like the SBA requires and take the amount of time, and you don't even have the qualifications for it, you just meet the minimum, that isn't enough for them to approve you. You have to show significant growth and expansion for these funds, not just refinancing old debt, debt consolidation, business expenses, payroll. That is not only going to cut it. So I have information there. An alternative SBA loan program. I speak about another one there. Online bank term loans. If you can qualify for the bank, that's where I would have started first. And there's online banking that can get you funding much faster. Sure, the rates will be a little bit higher, but that's what you sacrifice with time and a few more things and flexibility. Personal startup loans for business. Nowadays, you have to have at least a 680, have reporting trade lines, having accounts, at least 5 trade lines. You have to meet a minimum of 50,000 annually of what you're making and verifiable in taxes and pay stubs, W-2s, etc. So if you don't have any of that, this won't work for you. And there's quite a bit more stuff that I speak about here, but I won't get into it. Asset-based lending, real estate inventory, etc. Cash out refinance. If you have any properties, we can inject equity out. We can take money out. Maybe you're in real estate, even if you're not in real estate. Equipment financing, leasing, lease sales back, where you can give up an equipment, sell your equipment, and then we can get you funding. That's another thing. And I have multiple options there. Credit line hybrid program, 0% interest for 6 to 18 months, but you have to have a 680 plus in all credit consumer bureaus for your personal credit side of the equation. But it's very low documentation, really no documentation. You don't have to submit bank statements, tax returns, etc. But credit is very much an emphasis in this program. This is a huge credit program. And as a startup, that's where you can begin, and you can use a guarantor. You can bring in a family member, a friend, whoever it is, have them put you on their account, and then you leverage their credit for you to get startup funding or however you're looking at this. That's how you think outside the box. But you have to be careful that you don't abuse that, because if they don't trust you, they will never sign you on. And if you already have a history of making late payments, and you don't have a history of building a business or showing that you can make sufficient payments on time and even pay it off earlier and take on less than you can chew, and you know what you're doing, they will never. And it just depends on the person. But me personally, no, I wouldn't ever let you. You don't have experience doing any of this. You've probably been in a bad situation. You haven't shown anything to me yet. That won't work. So I cannot, especially if I'm lending you money, even if you're a friend or a family member. Nope. And I don't give it a second thought. Like, I'll explain to you why that is, but I won't until you have the details and you can show that you can make the repayments for me. And then another part of that we have is bonus business, building business credit, And aside from getting business funding through private lenders or non-private lender programs like PayPal Working Capital, where you have to have built sales history within that program, you have Clearco, you have other ones out there where you can use it in that way, where you can get on those platforms. But they're not my number one recommended, because you're staying attached to them and you're only working dependently on PayPal sales or accepting a certain type of payment structure, and it doesn't give you as much flexibility as if you were to go somewhere else. And then the interest in the payments can actually, with a fixed fee a lot of the times and not interest, but that can accumulate and it can become more expensive. And there's a lot of non-flexibility. So when you build a relationship with the lender, that's much better, I believe, than going through like PayPal Working Capital and all that, because you don't get to leverage better rates a lot of the times, and so forth, terms, all of that included. So let me move back into this email. Again, I can't show you this, but I'll get onto the share screen and show you what I'm going through on that documentation. So I also spoke about SBA EIDL latest update and help. I'll send you some of that information, even though it's been expired. So you're not asking questions. Go through that questionnaire, click that video, watch it, questions answered, boom. It saves you and I time from having to email each other back and forth. But if you don't read it, like, these emails by no means are supposed to be short. I get it. You're like, well, you gave me a lot of information, but I also showed you what's the best option. I also broke it down for you like nobody ever will. I also showed you the conclusion, bonus tips and bonus material. So yeah, if you spend 5 to 10 minutes, even more of your time reading this, look at it at night and come back in the morning refreshed. Maybe you have to look at it again, or you know what to do, but you at least took the time to do it. You didn't just go, I'm going to submit a questionnaire on this guy's side and he's whatever. He hasn't sent me a response back yet. I don't care. And then when I get a hold of people, they become Casper the Friendly Ghost or Homer Simpson. You know, the guy who just, have you seen the meme where he goes into the bushes like this? Little by little, that's what I see a lot of people doing. And then they come back to me later on and go like, well, you just didn't look into your email. I know it always sometimes lands in the spam box. Not always your fault, but you're a business owner. You should be savvy about this in operations and what you're doing, because that's where we spend a lot of our time on. Employee retention credit program. That's where you can get up to $26,000 per employee. That's still going on. It's become a bit more limited, but again, I will leave you information of this program and all others that you're hearing about here today. But there's a lot more we got to cover, so please stick with me. I know I said 20 minutes. There are more products that I could have put on here, but I put about just about all of them that are going to be the best, and you see just about all of them in there, and that's what works out. So conclusion, so I say something like you have a great number of options for this specific individual, and I'll start from the top to bottom. Overall, I would go with the up to $2 million application through, and then I'll sometimes list the lender and or the brokerage to get non-collateralized funding in a lump sum. And you would like to get your funding much faster without supplying a lot of documentation. And don't mind the rates. It's not all about interest rates. Rather getting a longer term if possible, if you can lower your repayment. It's about the repayment, not the interest rates. And I know how that sounds, but it's like I hear that every day. And if it comes with a lot of people who, you've been seeing my content for quite a bit, and you still don't understand it, it's okay. Ask me a question. I can clarify it. But if you've been like there and you've been hearing it over and over, there's only so much I can do and put attention to. And I can't devote my energy to every individual every single day. Like I get a lot, and it has to not be a standout profile. Standout profiles help, makes it easier, but I will help out just about anybody. And I just don't just jump on calls every single second. I was with the individual the other day for over an hour not because they had the best funding details or they could even qualify for something. It's just what I was getting was a lot of great stuff and transformation. And they didn't just say it. They actually went to go take action on it. So you can tell me one thing, but you do another thing. Don't be that person. And I'm going to be very clear with you when we're on calls, concise. I can be short, I have to be vague at times instead of being more open about everything until you see these emails. So conclusion, bonus advantage. A lot of things come with bonuses that you guys get, and I won't speak to all that right now, but it'll be in that email. Now, let me open up this right here. 1 second. So this specifically what you're looking for, you may have seen in the past, but remember how I said there are cash advance products between 3 to 11 months, 4 to 11 months for the most part. Well, these are the qualifications you're going to see for this in just about every program. And this can also pertain to the 12 to 24 months and even and above. So this you have to pay close attention to. For qualifications, do you have a business checking account? Must be in the name of your business, not a personal account that you use for business. And like I said earlier, you can use a personal account for gig worker funding at the moment. There are no credit score checks, but this is the opposite. When we're trying to get you approved, if you're doing 5,000 and above, 15,000 and above, we want a business checking account. Anything underneath that, you're doing 3,000, personal checking account is fine, even if you have a business checking account, because your revenue is less. Your online banking is set up. We're in a digital age now. You're going to be getting online applications and PDF. I will try to show you the two if we still can do both, but for the most part, I'm going to lead in with online. And with these online applications that I show you, for at least my part, are very safe and secure. You don't have to worry about anything being fraudulent, anybody taking money out of your account. When somebody tells you to link up your bank account and it's a trustworthy provider, which I will show you, then do it if it makes sense. Like, don't get to a point where you fill that information and they're asking you to verify your banking institution and then ask you to link your bank account, because what they want to do is verify it. And at a level where you're doing 5,000 and above, but not more than 15,000 or less than 5,000, a lot of this is automatic. It's not manual. If you're doing more in revenue and you have, it's a file that needs more attention to, guess what? Our underwriters will look at it more thoroughly. We'll ask for bank statements, tax returns, and so forth. But if you're doing less, all that's needed is for you to link your banking information. And if your banking institution isn't added, we may have to look at it by sending this stuff by email, and or you may have a limitation from your banking institution. There may be a close on it where they're not allowing it to link up with other fintech programs, et cetera. And there may be other things to that you have to look at on your end. But when they're asking you to link your banking information, at least when you go through me, it's safe and secure. A lot of people right now, I see it. I can go through all of my notifications. I can see all, especially with bank statements and everything. If you are not following through, don't start. This is your fair warning to say, hey, don't put yourself into something if you are not going to finish it. And I get we are very fearful of, hey, people getting into our account. I've been there, done that. I know the feeling that you go through. I know how hard it feels when you're sitting there in front of a computer. Hopefully it's not a mobile phone, and you're having to link your banking information. You're like going, whoa, wait a minute. They're going to get through my account and then they're going to pull money out. And no, we're just trying to verify you are who you are and everything looks clean enough for us to approve you for the amount. And then we move on to the next part. It could be another part of the underwriting process that we may be looking at more about the credit. So it starts with business stuff, and then we get into the credit side of the equation, and then we readjust the offer. So that's part of the underwriting, which I'll try to talk to you a little bit more as this video proceeds. So let me open this back up again. And like I said, there's manual and automatic. Sometimes we'll ask for bank statements. Most of the time, if you meet certain guidelines. So over here, you're not transferring funds from multiple bank accounts and not going from personal to business checking, because this does not count as true deposits or organic deposits. No more than 5 non-sufficient funds, that's NSFs for short, or negative days in any of the last 3 months. For example, bounced checks. You have too many of them. So what I mean by personal to business, that won't count as actual revenue. And if you're transferring from multiple business checking accounts, which a lot of us we do because we separate our finances by equipment, payroll, etc., we can do that. And as we get bigger, but if it looks fishy, the ACH deposits or however they're coming from, we can't verify that to a lender. That looks like you're manipulating bank statements, and I'll get into that in a moment. And they won't take your file. So what you're getting in ACH checks, cash, however the money's being given to you, push it directly into your main business checking account. That's the one you want to lead with. Now, if you have multiple business checking accounts, we'll want the primary one with the higher amount of revenue. And then we'll look at the other ones, and we may ask you, okay, let's collect the 3 months of bank statements from this one, from this account, and then from this one. And if you're not willing to go through all that, at least now you know. And again, there are people, and I'll get into the final underwriting. I don't want to get into that right now. But are you doing $15,000 plus per month in sales with each of the last 3 months? If not, then you can refer to our Bank Breezy or other product that we have for up to $25,000 service, or we also have another product up to $5,000, as I've been already alluding to, and there might be a few more. And it shows you a little bit about what to expect there, what you should be doing at least $5K between each of the last 3 months and on average. And if this doesn't work, then you can get up to $5,000 as a gig worker, independent contractor, 1099. Okay, so this is a huge part. Listen to this. Right here, you're depositing frequently and consistently at least 3 times per month over the last 90 days or so. Not 1 month with 3 deposits and then another 2 and then 1 or 3, 2, 3, etc. I think you get the point. Let me move this over. Yes, it took 38 minutes to get to this point. And if you're here still watching, I greatly appreciate you. You value your education. A lot of people would have said, this is too long of a video before they even would have clicked, or at some point they would have thought, let me go away. And I could put this, and I have different videos, trust me, I do, that cover each section. So I could make them shorter, of course. But if you are not, don't just pay attention to the EIDL loans. Like, you would have gone by with EIDL loans on this. You would have gone by with a less than sufficient credit score and so forth. Other parts that they don't look at, like we look at when we're going through these. And if you don't have consistent, frequent deposits that are verifiable deposits, organic, as we've talked about time and time again on this channel, if you've been with me, and you are minimally depositing, let's say you have, like I said, the 132 example, and it just shows too much inconsistency. And then on top of that, your average daily bank balance is so low, or low enough where, let's say you're doing $60,000 a month, maybe you had on average that, and then you have $40,000 on your lowest month. you're depositing 40,000 and your probably revenue wise is 35,000 because there's a difference there. But we actually look here. I look at this all the time. Average daily bank balance. Sometimes I have to compute it with extra information that I need for interests. And then there are times when, like, for example, if you have Chase or some of these providers, banking institutions, they'll show you like what is your average daily bank balance. I can look at that, or I can go and compute and I can see how much was it that you were depositing per every day, or how much times you were, and then do a calculation on that. But you do 38,000 in revenue, but you have only 1,000 average daily bank balance. So what is happening here? A lot more is going out than is coming in. As soon as you get this, boom, 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 gone. And it shows like that. It's even worse if it continues to show like that throughout the month and months. So even 100 and below, that will disqualify you. And even in some cases, having 1,000 and below will too. You can have it with 1,000 and below, but we have to think about as well as, are you overdrafting? Do you have a negative balance? What's your starting and ending bank balance? Again, how many deposits? What types of transactions are you making? Are you a gambler, or what? Why are you doing this? Why are you into stocks and you're doing this and you're using money from your business to use it this way? That's unreliable. And it doesn't matter if you made 180,000 with that money, but you made it over 6 months. No, you can't fool us. And so when people come to me and go, well, I was doing 40,000 and I was told I can get between 75% to 200%. Yeah, if it looks consistent. Now, I have individuals like I have right here, a bank statement. I won't tell you who the individual is, and I have plenty of these that I get on a daily basis. And sometimes, a lot of the times, I'll ask them from you. And then sometimes it's just where you can upload them online and we can see them there on our back end. So sometimes I won't ask for them. Just don't worry. That's okay. But here I have an individual. Let's just say, I'm not going to give you the exact amount, but here's a summary of your activity period, minimum daily balances. And I can look at that, but I can also go through the deposits and additions. And again, I'm not showing you this. It's confidential. And deposits and additions, the checks paid, when was that date period, what was the amount for that date period. And then I have so much more with the transactions, electronic withdrawals, credit and debiting, what's coming in and what's going out. Does anything look suspicious where they're transferring? No, doesn't look like they are here. They're getting payments from here. I see where they're coming in from. Now, how much are they getting? That shows consistency, little deposits, bigger deposits on these accounts. Okay, now we understand why that's the case, why they were giving a wire transfer there, and that's okay. That works because we can verify where that's coming from because we can clearly see it. We can track that. So having an individual who's doing about 70,000 or 80,000 and having an average daily bank balance of over 20,000, 30,000 looks much better, especially with consistency, as opposed to them doing 70,000 and only have 1,000. And then the next time they have 3,000 and they have back to 1,000. Like, what are you doing? More is coming out than it's coming in. So these are reasons for why you get declined and or you get far less than what you want. So just because somebody tells you that you can get approved for more, it's not the case. And I can get you ballpark ranges even without bank statements submitted to me based off of your lowest month, average, your FICO, time in business. But again, it will be readjusted when we go through all of it in the underwriting process. And even if I have the bank statements, even better, because I can probably make more of a better calculation. Most definitely I can. But it's not always needed for me to fill out these questionnaires, so don't think that. Now over here, down here, current loan consideration. If you have a current capital advance or the amount you still owe will be taken into consideration and cause a reduction in your approval amount. More funds, second to fourth positions may be available. If you have an existing cash advance, which you don't, if this individual, well, it's kind of alluding to that. But if you did, it will cause a reduction in what you can get. And if you had more positions, you may not get anything at all. This goes the same with all business loans, but if it's idle, then that you only have, then it's okay. They are not correlated and it shouldn't cause a reduction. With the exception now that we're getting into this impending recession where banks are becoming more reserved on how they distribute their funds and who they distribute it to, what industries, and especially to the lenders getting less because that's a lot of the times where they get their money. But if you are already having trouble, you've already been in a default. I get people every day, well, you didn't pay attention to me, or I've been trying to get you to help me. Well, I did help them. They just one in here, one out the other. Sorry. It's just you don't pay attention. You don't listen. And if you're not listening, I'm not going to baby you. I'll hold your hand and help you. And I'll do it with pride and not judgmental or anything like that. But if you need hand holding every single second, because I heard what the EIDL loans did, this is what PPP does, this is what the grants do. Yeah, but this is what private lenders do. Welcome. That's what I'll do. Welcome. I'll introduce you. And it'll do this. It'll open up your eyes and be like, damn, that's how it works. All right, well, I wanted a 15% interest, but it looks like I'm going to get 38%. Well, it's not about the interest. It's about your ability to make the repayments. Can you get a longer term? And if you can't, can you take what you can get and not bite off more than you can chew? We never get you an offer that wouldn't make sense to you. And then knowing what you're going to use those funds for is most important, because you just don't start an application and you're in the system. You end up in the lender's system, the data merge, where they have a system behind all of this and they know you. And I can't give you, and they give me a lot of information that I can't disclose to my clients. A lot of it I can, but some of the stuff you wouldn't believe it. And it's because of your attempts in leaving offers on the table, which hurt you. So don't leave offers on the table. I'm releasing this on July 1st of 2022. Now, if you had an offer before this day and you didn't accept it, we might have to look at now your June bank statements as opposed to not, because now it's another month that we rolled over. And then we will probably have to look at another piece of information, so it could take a little bit more time. But that's because you may have put yourself there. I usually will explain it to you that you shouldn't, or if it's worth it, because you can drop a month and take your last 3 higher revenue months. It might make more sense to you, and it'll help you get the type of funding that you want. Back to this document now. So even with the EIDL, it doesn't exactly correlate, so you shouldn't exactly be worried. But a lot of lenders in today's market, a lot because of the economy, where somebody would have been given 15 months, they may have been receiving 12 months, or 18 months, they would have been given like 12 months now. And instead of getting 150,000, they might get 100,000 and a little bit below that because of the industry, and as well as the economic positioning that we're in. Also, not have issues with financial fraud, past default, and past default judgment in place. You've submitted altered bank statements to another lender. Or have you done any of this? Have you had a past default? Yes. If so, you might try another service, but it won't work because we had already evaluated it. And just because you didn't get approved because I had a default for an MCA, and we'll try an unsecured to no, it just doesn't work like that. Usually when you get a default, you can never get funding ever again. You're not trustworthy with money. And why would we give you money if you couldn't handle it the first time? And if there's somebody that can, there usually is like about one lender, but they're going to tell you, hey, I'm only going to give you 10,000, but you better pay this back to me in 3 months. They're going to give you a higher rate. And if you can't pay that back, if they show that you're not making the payments and you're struggling, you're done. They're never going to give you money. Why would they trust you with 40,000 and a better rate if you can't even pay 10,000? So you have to think about all that. Default judgment in place. A lot of people who go through this, and there's still some people that have been able to receive funding with a default judgment. But again, it's very seldom, and you have to have very strong details and a very strong projection to where you're going. Not just, well, I need it for COVID relief, or no, in the next 3 months, this is where our hardest season is, and then after that, I will never be up there again, and it just fluctuates. P.S. If you have fixed all these issues and you previously applied for funding, you can wait 30 days to do it again usually. Now, I have another document here. Let me copy and paste. So please read this to the very bottom, and you may have seen this document. So let's go over it very quickly. Here's how your banking activity could be causing you to get declined for a business loan / advance. Any kind of funding forever. Your banking activity may be leading you to doing this. Transferring your funds between multiple accounts, which from a lender's point of view, you're manipulating your bank statements. Whether you don't think you are, and may not be, but this is how it stands. Therefore, your funds are not deposits, instead they are transfers from your other bank accounts, which thus equals low volume after the fact. Oh, and perhaps the add-on the industry that you're in, it looks even worse. Yes, this is all more of an issue for those who have a business checking account, and if you don't, again, I spoke about that earlier. Over here, perhaps if you don't get an advance or a business loan, a personal loan used for business. If you have strong enough credit, because we value stronger credit as opposed to cash flow, but we'll still have to look and see what you'd qualify for. And if you were expecting a lot in one take, you can come back and time again and get more. And if it doesn't work out for you because you need it all at once, there's another issue or there's another case. So now be careful of transferring your funds. Just don't do it and don't have it be suspicious. Just have one main account, business checking account for your sales deposits, and then this won't be an issue. Personal checking account to business checking account is not actual revenue. I already spoke about that. Frequency of deposits, I already went into that. I spent a good amount of time on it. So be careful of what you're doing. If you have little to nothing, average daily bank balance is less, and what you're depositing. Usually, your depositing revenue is higher, but average daily bank balance is just way below. You have so much that you're withdrawing. Your transactions that look fishy enough already, that will just severely bring you down. Starting and ending bank balances as well. You want to make sure that's up above and it's consistent. You may have a bigger starting bank balance, and then your ending is less, or it could be a bit of the difference of the two, vice versa. So over here, just ask, did you learn something new today? Please let me know your thoughts by replying back if you'd like, not like I'm forcing you to. LOL. Talk soon. PS, fraudulent activity, it's 100% going to shut you down for funding, no questions asked. PPS, you can use a personal checking account for business to get funding, but that's for self-employed funding. And then it takes you to a application, or I might show you how the application process works so you can understand that better. Now, let me move over to another document. That's a client situation. I may just talk about this. Okay. So I'm going to move this very quickly, and we'll jump into the next part, and then we'll get going. So I spoke with a business owner recently. Great person, great business owner, but wasn't educated in this space and how this works. Looking for the lowest of interest. They're price shoppers. And I'm sure we're all price shoppers to some point, but we have to let that go once we get somewhere. We've done all this. We've tried to accumulate work, and then we get to a point where I've accepted that this is all I can get. That's not a downside. You have to be more strategic. If you're not strategic, see what the EIDL loan has done to a lot of us is, hey, we have extra capital reserves. We're not using, we got approved for 100,000, but we're not using 80,000 of that. It's okay. We have 30 years to pay it back. Not like you have a cash flow problem. You're not using it for cash flow gaps or for other means. Maybe you don't have a growth and expansion project yet, but at least you know you have 80,000 left that you can use however you want, but you don't have to pay it back as soon as possible because you were given 30 years. But now when you're told over here, I have 6 months, only 6 months, and I'm only given 50,000, and my interest rate or my total payback is 1.45, the equivalent of 45%. You're paying 1.45 on that 50,000. Maybe you're paying 62 to 63,000 back or so, even more in 6 months. Holy! Is there a line of credit actually that I can get where I can withdraw and use the funds so I don't have to pay the lump sum back in 6 months instead of 6, 9 to 12 months, even up to 3 years sometimes? Yes, but you didn't get approved for it. It doesn't work. We've already tried to approve you for it. And I'll get into lines of credit here, but actually I'll say it now. With lines of credit, if I hadn't said enough already, you have to have minimal inquiries, low debt to income ratio, credit utilization. The reports just need to look good. Credit worthiness, you have a thin profile, no business credit established. It's just like forgettable. And a thin credit profile really just is what takes people away. No payment history, late payments. You don't show any kind of early payment history. You don't show paying on time. You just missed 3 payments, but you paid it in full just in the last 2 to 3 months. That doesn't help us. Maybe in 4 to 5 months you can reapply, but you'd have to come into it with stronger credit and even stronger revenue next time around so we can believe that we can give you this. And there's more to that. There's a background we have to look at. Bank statements again, and then there's quite a bit more information there. So that's why there's less approvals for lines of credit than there are for a lump sum, even if you have substantial details. But I don't want to lose my train of thought. So this individual, I said, I understand, and the closest alternative in terms of interest rates would be accounts receivable financing, or in other words, invoice factoring. But the prime rates plus 2%, so 4.7, we're looking like 6.5 or so and above, which gets you slightly under 8% or so in today's market. You can also factor invoices under the SBA 7A loan, which gets you on average between 5% and 9% rates in this market. The SBA 7A prefers AR. So I'm going to skip through some of this that I already said. Other than that, you have lines of credit, which can get you an interest rate between 1 to 3% per month, or amortized between 0.69 to 1.39% per week, which overall keeps your payments lower, and you can get weekly, monthly repayments in a lot of cases. So unfortunately, this isn't in this current economy. Not even traditional bank loans will go as low as much as what you need. They were looking for about 3% interest. It just wasn't going to happen. It was unrealistic, and they haven't responded back. Information gatherer without responding back, at least saying thank you or okay, acknowledging it is one thing, but actually responding back, even with something so simple with 2 words, would have been enough. It's fine with me. It shows me where you are. When you say something that's very minimal, and it just shows you don't have interest in it. At least show that respect instead of, oh well, okay, bye-bye. I'm gonna go find another option. Because that's what a lot of you guys will do. And I work with the best lenders and providers. If I look a little bit tired, it's not because I keep emphasizing this. Part of it can be, but it's been a long week, and I'm releasing this video on Friday, so please give me a break. And I've been showing consistently up on video for you guys, trying to help you guys. And this will be uploaded after this live is done, so you guys can rewatch it carefully. And I probably will send this to you guys. If you guys send me emails, I'm going to send you guys this every single time. I'm going to try to, because if you don't take the time to watch an hour's worth of content to help educate you on what you need before, and I'm going to put up a little bit more information, then it's like you're not willing to get even to a point where we want you to submit your bank statements to get you an offer. And what are you going to do then? So unfortunately, this current economy, again, nothing comes close to government money like the EIDL loans. If you're going through grant programs, which I released content on, the Community Advantage program, where you can get up to $350,000. I made a video. I'll try to link you to that down below. For startups and newly established businesses. And then you have the $10 billion in grants, business loans, and equity. And those are for underserved communities, and quite a bit more. So you can check those out. So my question to you, after saying all of this, I said their name. So my question to you, and I put their name here with emphasis, because I want you to know that I care about you, but I want you to have an understanding of what I just told you. What will you primarily be using your funds for? Is it for survival, money, growth, and expansion, or a bit of both? P.S. Outside of this, you can get the credit card stacking program, and I spoke about that. PPS, other options for asset-based lending or employee retention credit. But let me move this over now and open up a new tab. I think this one would be the best one to lead in. Yeah, let's do this one first. I don't want that. Let's go here. If you're getting value out of this, I would appreciate you if you give it a thumbs up. At any point, if you guys want to leave me a comment, please do so. If you did get enough value out of this, I would greatly appreciate it if you would share it with others who need this education, people who are stuck on the mindset of this is how it should work because the EIDL loans work this way, or PPP loans. No. And so every lending product will be different, but for the most part, what you've seen here today is what they're going to be looking at. And I'll be getting into some of the other ones if we can come back to it at the end. So there's this free 6-step pre-approval lending checklist that you can pick up down below in the description. And you can also submit your funding details where I can evaluate and analyze. And if you already did that, I have done about 15 of them today. Tomorrow, I'm not sure if I'll get to it because we're doing cleaning around the house and we have to bring somebody to clean the carpet. So I have to move a lot of stuff physically. I know, not my favorite thing, physical work. My mom will tell you that. She'll be like, I know you're physical. You're like, whenever my mom talks, she'll go, I know your favorite thing is doing physical work, but you go over there and take care of it when you need to. But I'm like, yeah, it's fine, but it has to get done for what has to be taken care of. So there's this free 6-step pre-approval lending checklist right here that you can pick up down below. And there will be 6 questions, hence the 6 questions. And things like, should you apply for a small business loan? Is a small business loan good for your business? Can you qualify for one? Or can you qualify for a grant? What types of small business loans are there? 5, when should you apply for a small business loan? 6, should you work with a small business loan broker? And additional questions you need to ask yourself. A lot of good stuff. 7 important alternative business capital requirements. bonus material in there that you wouldn't have heard anywhere else. Bonus 2, a bit of what we saw about banking activity, how that can lead you down a wrong path. And just a little bit more next steps on what you should do. And I had another video where I created content around it that I'll try to link you to again down below. And if it's not there, it's okay. Let me see if I can open up another tab here, and then we can close up the shop. What was this one? Okay, so you've probably seen this before, but I want you to have an understanding of what you could get approved for. These are just some examples that I took together. I modified them, so I don't show you the exact clients. And like I said earlier, about that questionnaire, going back to it, in my home, I'm going to have to be doing a lot of, because the cleaner will be in here cleaning the carpet. And so I know I'm so enthusiastic about it because I have to myself usually move everything. But that's what's going to happen. And then going back to this on the happy side of the equation, 100,000 to 330,000 should be saying here. Let's just say 30. Yeah, 100K to 30K business loan offer and 13K plus free exclusive bonuses breakdown. So I talk about end of month offers and why it's important for you to accept the offer at any time you have at the last day of the month. But after that, we'll have to look at your next months of bank statements and or a month-to-date bank transaction report. Battling for the right offer, does it exist? I don't want to go too deep into that. I've done that in other pieces of video. But no, I don't believe it does, to be honest with you, unless you have strong enough funding details. So I put battling for the right offer does not exist. What you have to understand is, are you strategically going to use that funding? If you just, I'm going to go see what I get approved for, and then you get somebody like me who's now wasting my energy and my time on you, where I could have been spending those at least that 5 minutes into another thing, but because you didn't have a sufficient need for it, you just thought you'd go and apply for it, just save the underwriters and the lenders and all of us time, because we're going to try to communicate with you. We're not going to hassle you or anything like that. We're not going to continuously call or text, direct message, etc. Usually I don't even have to call. Just send you a quick text message, send you an email. Hey, you don't want this? Just let me know. And if you don't want it, I won't pay enough attention to you. I'll probably circle back, but it's what it is. So the person won't qualify. So I talked about an example here for an equipment financing scenario where somebody had to pay they had to put like $60,000 down on a $150,000 truck. So they had like over 50% interest. And that's because they had a bad credit profile. And we can accept that. If you have better credit, lower the down payment, lower the interest rates, get you more of a longer term. But if you don't have any of that, like I put here for one scenario, credit is an issue, which you're about to see, it won't work for you. So here's an example. Funding amount, 40,000. Credit, 540 FICO. Time in business, years or months. This person has a year and 4 months. Your monthly sales, 75,000. Expansion is their drop down, what they want to use it for. Business industry will say construction. Business name, not applicable. And I removed it. Any additional notes you'd like to share? Looking to expand business and increase the marketing advertising budget with more inventory too. These are very reasonable uses for funding. Now I see what they're doing in their monthly sales. And let's say for this example, because I've kind of moved it, let's say their average daily, or not average daily, average. Monthly revenue, it's 80,000. It's consistent with their lowest month. So this is their lowest month of 75,000. And they are averaging about 80,000. So usually we take the average, but if your lowest month is far less than your average, we're going to have to base it off of that score and get you like 75% to that, up to 150 or 200%. Now, if it's pretty even, then we could just take your average and then make an assumption around that and see what you could pre-qualify for, and we can go even deeper when we look at your bank statements. So reasonable uses for fun, using it for expansion. We know that this may be a scenario where he can double, triple, quadruple his profits. Would it be something in the short-term return on his investment? If so, what would that equate to, as well as and or your long-term? So not necessarily does it mean because they had a higher interest or dropped their interest, it's still in that 19 to 50% or so, doesn't mean it's bad. You just have to use it the right way. And is it what they only qualify for? Okay, great. Do they really need to use the funds? Okay, but I didn't want 80,000 because I got to pay 8,000 plus. Okay, well, we can probably try to get you less than that, maybe half of it if the lender's willing to do that. You can revisit the file, and that's what you do. You can scale back if allowed to get you the necessary funds. But here's his offer. Credit is an issue here. Congrats, your business has been approved for the funding amount of 30,000. We'll just go with that, 30,000. Once you pay this for 65 business days, you become a client in good standing, and you may be eligible for additional funding at much better rates and terms. Please review the offer below and let us know if you would like to move forward with funding or should we close the file. Kind regards, and move the name. So the rate or the total payback factor rate, you'll see this as 1.19 to 1.49, their total funding amount. So this, you can also look at it as 19% to about 50%. And in some cases, you'll get 1.19 to about 1.69. So 19% to about 70% interest. And that's because you're a high risk profile. You don't have the revenue. You don't have the time in business. You don't have the details. You don't have stability. You're fluctuating. There's a lot of reasoning behind it. So you're not getting a 15% interest and below, especially if you don't have collateral. You don't qualify for that. Funding amount, let's say here, 35,000 is what they get. We said 30,000. We said 30,000, but let's run with 35,000. Term, 120 payments. So they got 6 months. Daily payment, $435, Monday through Friday, no weekends. Lender closing fee is $1,245. Payback, they pay back $52,150. So they had a high enough of a, I believe it was 1.49 is what they received, about 50% interest. So they had to pay back $52,150 because bad credit. They may have had high enough revenue. In your industry is something that also we look at. Bank statements, average daily bank balance, starting and ending bank balances, the amount of deposits, what's coming in, what's going out, and a bit more. That's why they were giving a 50% interest. Now, if they were to be given lesser, well, your credit profile, your minimal usage, and all this, maybe you would have been given the average on these 38%. Maybe you would have been given 35%. Now, if you have higher revenue and all these details, then you will be falling into getting 1.19 between that and 1.30, so about 19% to about 30% with better details. And this is similar to getting it when you have an unsecured term loan with 1 to 3% interest. So when you got 23% interest here in an unsecured term loan, you would be getting 36% with greater funding details. This is not a non-collateralized signature funding with no prepayment penalties. And then here are the underwriting guidelines. I'm showing you right there. I'm going to speed through this very quickly, but you can rewind this. But this is how I assess the underwriters, the lenders. There's more to this too. On what bucket do you fall in? Are you an A paper lending client, B, C to D tier? That just means do you get the best funding details or you have lower funding details, and that's lower lenders that will look at your profile. They'll skip over your profile. They might not even offer you anything. So that's what we look at. So you can see the requirements with 1.19 to 1.30 equals A paper. Clients with greater revenue of over 50,000 monthly, excellent FICO 700 and above, and you've been in business 24 months, 2+ years is what you can expect as a payback rate. 1.31 to 1.49 equals B to C to D paper lending, which is about 20 monthly, good FICO 625 and above, and been in business 12 months plus. That's 1+ years. C paper 525, D paper 525 and below. The rates you get vary depending on your FICO, time in business, other credit issues such as past bankruptcies, if any, or number of current delinquencies. Lender partners take into consideration your time in business and monthly revenue dips when determining your rate. A huge one, especially average daily bank balances. Other issues that may impact you will be number of current funding positions if you have more, number of non-sufficient funds, overdrafts, bounce checks, number of negative bank days, number of inquiries on credit from other lenders, daily balances, along with a few other factors. There could be some UCC liens, but if this is non-collateralized, it's not really so much of a factor. Probably put the blanket lien on it. And also the economy. Let me put right here, in case you've seen this before. And this doesn't always mean the current state of the economy. This can also be the future state of it, your industry, what it allows you to have, and so forth. And again, like I said, right now you want to get in. You don't want to wait. and then find out you don't get enough or you don't get anything because there are a lot of reserves. Example number 2, funding amount 100,000, credit 700, time in business 2 years, 4 months. Your monthly sales 72,500 and above. Drop down expansion. Business industry is construction. Name, take it out. Looking to expand in the business and increase the marketing and advertising budget with more inventory too. So if it's somewhat similar, this could be trucking, this could be medical, cannabis, et cetera, et cetera. List goes on. Average monthly revenue is 90,000. So yeah, that's good. Their average monthly revenue is high enough, but their monthly sales on their lowest month has been a bit down. So it may have been that they were down in the last 3 months. There's a little bit of fluctuation there, something to be concerned about. Maybe not too much because they're still remaining high enough. Funding amount 22,000. Time in business, years or months, 13 years. Awesome. This is another one too. There's another client here, by the way. But before I go any further there, so again, this is actually strong enough details where this individual, depending on the industry as well, may have qualified for an unsecured term loan between 1 to 2 years. And if they had collateral to back up, we can get them more and we can drop the rates. Usually get them lower than 15%. And with the strong enough credit, they pass 660. They have over 25,000, I believe, in deposits. You can tell by that. And in true deposits, organic deposits again. And we also factor in average daily bank balances and more. They have 2+ years, which is good, which is a requirement. You want to have 2 years. So they may qualify between 1 to 2 years. This is a fact that it looks like they will, even with the cash advance, because they're doing over 50,000. They'll get 1 to 2 years. The difference is you will have more interest with the unsecured term loan than you would with the cash advance. In a lot of cases, you pay more total cost of financing. And if you want to save yourself on extra added debt and get out of it much faster, that's what I recommend, and be more strategic about it. So even if you get a monthly repayment, it's not always the best. And even if you have the qualifications for it, they won't always give it to you because of your industry. They see things in the bank statements. They go, well, you would have qualified for a year, but we're actually going to give you 10 months because you just don't have a good profile. So it won't work that way. So there's another example here. Funding amount 22,000, time in business, years or months, 13 years. Credit 560. Business credit, nope. Your monthly sales 19,000. Your average monthly sales 20,000 to 49,000. Drop down, COVID relief, business industry. I put nothing on all of them. So with that situation, credit is bad already. They're doing 19,000 and above, so they're more considered a C to D paper lending client. They're not doing above 20,000 to 25,000 to consider them to be in the B paper or even in the A paper range. So this person may get between 4 to 6 months. That's it. Nothing more than that because of the credit. And also because they're not in a range of monthly revenue, usually about 25,000 and above, to get them between 7 to an 11-month time frame. They have the years. They don't have business credit established, which doesn't always become a factor, especially with cash advances. COVID relief shows me that it may be that they're already cash flow negative, or they will be, or they have cash flow gaps. They're just trying to recover. There's fluctuations. They're just trying to get back to a point where they can get to. So they may need a line of credit, but they don't qualify because they have a 560 FICO. They have the minimum requirements of revenue and time in business, but the credits would be a huge reason. And then no credit worthiness, a thin profile, done, out. Funding amount 40,000, time in business 5 years, 660 FICO, business credit no, monthly sales 35K, average monthly sales 20K to 49K. So a little bit to what we saw earlier, but this can also give them 7 to an 11-month time frame because they're doing above 25,000. Now, if it were over here, like this can still get them underneath 7 months because they have 20K to 49K. But over here, if this were, like, let's say if it were 35,000 or even more, or a little bit less, but it was above 25K, then this individual looks like they're going to be getting 7 to an 11-month time frame because they have over a year, 5 years, they have over 600, 25 or 600. So, okay. 7 and 11-month time frame. They have over 25K, so that'll get them the terms of 7 to 11 months. And now the rest of it, what we look at is the bank statements and everything, background checks, and making sure average daily bank balances, and we can make a readjustment on everything. So over here's more information. Funding amount 600K, time in business 8 years, credit 780, business credit established, yes. Monthly sales 300,000, average 250K and above. And then we have use of funds for expansion, additional marketing, advertising, inventory, payroll, debt consolidation. So this individual has a lot of reasons for it. And they have a strategic understanding of how they're going to use their funds. And this is the whole premise of this is have a strategic reason. Do not just say, oh, I wanted a payment of $1,000. And I released this the other day where, and I'll get to your guys' comments in a second, but I've said this so many times. I just said it recently. Like, people come to me and they go, well, I got approved for a $2,000 weekly repayment and I'm paying $8,000. They can afford to make it because we can never give you an offer that doesn't make sense. But people want, oh, I want at least $1,000 a month or $1,000 a week. It has to be monthly. It has to be 100. Doesn't always work that way, where I can always go back to a lender and they'll say, yeah, let's drop the 40,000 to 20,000, so it drops the repayment. And in some cases they will. Not everybody will do that though. So be realistic about what you're getting. And it's not like you're going to be getting an EIDL loan where you're going to be getting $1,000 a week or even far less than that type of repayment. So understand what you're using your funds for and be strategic about it and not complaining. And if it's credit is an issue, we look at repairing credit if possibly. So 4 to 24 months, 12 to 24 month range of 18 months, 1 to 2 rate is what they received here. So they got 23% interest, which is phenomenal. And 18 months to pay it back. Sure, they may have gone somewhere else, maybe an unsecured term loan, or they would have received collateralized if they would have collateralized an option or another way. But they wanted to repay this in the littlest amount of time possible. They got approved for $600K, but they could take $150K to start. You take $150K, so you don't have to supply, not supply. Sorry, I had a text message there. So not supply a recent tax return, year-to-date financials, current year, sometimes last year, and a bit more. That takes an extra 1 to 5 days or so. It could take a little bit more time. So this individual, instead of taking the full 600K, they took 150K, dropped their repayment, probably paying about $10,000 or so a month, but that's doable with their business. They're going to be doubling and tripling their profits. So whatever they're repaying back does not even matter. But to someone else who can't do that, you're going to continue to fight and complain and whine and wonder, come back to me. And it's just a lot of energy and time wasted. But we can revisit it. I don't mind. It's just come into it with a better understanding of what's going to happen. Documents needed. You can see a little bit about that. And this is dependent on the lender, brokerage, etc. But with minimal documentation, you can get in with an application, usually an online nowadays. You can do a PDF, but usually online. Uploaded bank statements onto that, and we can see it on our end, or I'll ask for them and I can submit them for you. Voided check, driver's license, tax return. Make sure when you submit a voided check, it says voided across. Driver's license, tax returns optional if you're getting over 150,000, sometimes over 100K. Financials only required for everything over 100 or 150K. Profit and loss, balance sheet, tax returns, AR report. Okay, I'm gonna go away from there, and I'm gonna see if I have any more tabs open that I can cover, and if not, we'll get moving. Yeah, it looks like I've covered everything that I've needed to. Let me go to the comments section. Hi, there is anything for Uber drivers? I asked many times, money was run out. Hi, Slice of Life, how are you doing? Have you heard me talking about Uber driving programs? I don't know if you submitted the questionnaire. I may have responded back if you did, but I've been speaking about this regularly every day. I've been releasing content, broadcasting it to everybody. A lot of people already know about how they can get funding for their Uber service, their Lyft, grocery shopping, self-employee funding. I'll leave information to you down below in the description where you can get up to $5,000 in funding for self-employed 1099. So check that out. I think it's in there now. Hopefully it is. If not, I'll update it once this is done going live. But there is help for you. You just have to meet the qualifications. It's one thing to say, hey, they're there, but if you don't qualify, then what is my other option? There may be grant programs. I'll leave that down below, the 10 billion in grants, loans, and equity, and how to find these grants within your county and so forth. I have information of that I've been releasing, but I've been saying this forever, whether that was, with me or someone else. I've been speaking on this topic for the whole week. I've been saying it last week. I've been saying it every month, and I'm going to continue to say it over and over because it takes about 7 to 11 times for us to really understand it and hear it. And I know people who watch this won't fully watch it and come back and complain about something. And then it's like, well, you didn't even take the time to watch an hour and about 30-minute video now that we're going on. But let me transition into the last topic here, and then I'll close up shop. There's a bit more, every lending service has its different requirements. Like I could have gotten more directly into the SBAs. I could have got more into the equipment, but you heard me say that, and you'll see these in the questionnaire. That's why I have this right here. If you submit this questionnaire, you'll get an email response back from me where I can evaluate and analyze and give you a proper response back on your best funding option and options. Very thoroughly broken down from top to bottom, and you get a free 6-step pre-approval lending checklist to get you approved for funding much faster. So it's right here. It'll look like this more or less. I offer more services. These are just a handful that I put on there. So you can see that. Oh, and one thing too, let me look through my documents here. If I did not say this, I hope I did. I think I went through it already. But you get approved between 10 to 15% of your annual gross sales. I think I said that, if not up to 20%, but more in the 10 to 12% range. So if you do the numbers already and you're doing a certain amount of revenue, you have a certain amount of average on annual gross sales, and you're saying you're doing this, but then you want 2 million and you're only doing 50,000 a month, probably doing somewhere between 300 to 400,000, 400,000 by 0.1 or 0.12. That's not going to get you the 2 million, at least in one take. So understand that you get approved between 10 to 15%, if I hadn't said that enough already earlier. And I think there was a section where I spoke about, let me see very quickly here. I see it on your end. Okay, so I may not have gone into that so much so, but those are the expectations: 10 to 15%, if not 10 to 12% on average, and then sometimes up to 20%. But that's a harder case. You have to have stronger details. So I'll leave this questionnaire for you guys down below in the description, so you guys can get in touch. That would be the best way to do it. And if anybody has any questions, I'll leave it open for another 30 seconds or so. But I've covered just about enough of what you guys need to know. And if there's anything that I missed, I'll leave it down below in the description, like the 10 to 12% and so forth. I just needed to write a few notes just so I can remember. I already finished up my to-do list for today. See here, I cross off a lot of things that I get done with on my calendar. And I also have my online where I can use all that information. So I got to go upload a few more things. I'm going to be busy doing that. Tomorrow we'll see how much I can get done because we're doing a lot of carpet cleaning. And then we will revisit everything again next week. All right, so hopefully you guys got value out of this video. We covered everything from qualifications for programs, different programs, what you have to meet, how much you can get approved for. Again, we spoke about that. Usually you get approved between 10 to 12% of your annual gross sales, if not 10 to 15%, sometimes 20%, but that's far out. And then it's different services where you can get approved for between up to 75%, 75% to 200%, 20 to 25%, 50 to 150%, 40 to 60%. We didn't get into that much, but everybody has a different amount. And it all comes down to your bank statements, tax returns if we need them, average daily bank balances, number of deposits, the more the better, frequency, starting and ending bank balances. And a lot of this information, there's a lot more to this. Nothing different changing with PPP, EIDL, ERTC is there. The grants at Community Advantage Program. And yeah. All right. That concludes everything, guys. Have a great weekend. Talk to you all soon.